All right. So you probably have been in forums and you see people post the screenshots. Hey, here's my revenue. But revenue is not what's actually going into their pockets. As we all know, you can have $1 million in revenue, but that does not mean you have $1 million going into your pocket. So how do you manage all the stuff in between? So I'm super excited because we're going to be talking about that with Sam Hill, who is the Ecom CFO. So
Woo!
Sam, thank you for jumping on here and chatting financial stuff.
Oh, it's awesome to see you again, Kevin.
Yes, yes, good to see you. So you were a speaker at a couple of things that we've partnered with on. So you were at the Ecom Profit Workshop, as well as you were a speaker at the Ecommerce Business Builder Summit. Both were, either a workshop or a virtual summit that I had hosted, and had really good feedback from what you had to say there. So you definitely know your stuff when it comes to the numbers.
I hope so. From this point, we've worked with enough people that we know a little bit what we're talking about.
Well, good, good. Well, just to help everybody understand kind of your background in all this, describe your background with numbers and how eventually I got into the e-commerce world.
Yeah, for sure. I mean, my degree is in accounting. I have my CPA license, but accounting is like actually not my favorite thing to do. I think it's kind of like more of a necessary evil to be able to get you to be in the position to make a more strategic and better financial decision. Yeah, e-commerce CFO is about 2 years old now. We've probably worked with 50 to 75 different e-commerce businesses, a lot of Amazon sellers, some subscription folks, some people that sell on Shopify, some people that sell wholesale and retail, all different types of industries, CPG, beauty products, outdoor products, hiking products, supplements. I mean, you name it, we've just about touched it.
Yeah. Well, that's awesome. That's awesome. So you've definitely gotten to see the wide range of different types of businesses and different types of products. So help us understand like managing the numbers. So there's probably a lot of people listening to this and relate to the idea of maybe not an actual shoebox, but there's always kind of the analogy of throwing a bunch of receipts in a shoebox and then handing it to your accountant at the end of the year. Or some people, maybe they're just selling on Amazon in the US and they just pull a couple of reports and they think that that's good. And, they kind of have a good sense of comparing that to their bank account and somewhere in between. So, but then you start outgrowing when you're in multiple marketplaces, selling in different places and and then you got costs coming in different ways. So, what are some basic financial reports that people should be putting together to look at and why?
Yeah, certainly. And you're right. It really all depends on what your level of scale is. And I think this
Yeah.
is one of the pitfalls that I see is your accounting function and the way that you look at numbers and analyze the financials are very different with different levels of scale, both
Mm.
not just in terms of revenue, but also in terms of number of SKUs and the different channels that you're selling on. And the complexity of your accounting and finance decision-making system should parallel the complexity of your business for the most
Mm.
part. So if you're selling, $50,000 worth of product a year and it's a couple SKUs, I don't need to spend $1,000 a month on a bookkeeper or a lot of the complex technology to parse out every item detail. I can
Mm.
probably manage that in a Google Sheet because
Mm.
there's just limited transactions, and my time at that point is better spent elsewhere in developing new products, managing the ad campaigns or launching on a new channel or, managing the reviews or talking to customers and handling customer complaints or returns or all that stuff. But as you get into the, 250,000, 500,000, and certainly 1 million
Mm.
in sales annually, then I need to have a little bit more complex system. And by complex, I mean thinking about getting something like A2X that's going to automate my Amazon payouts and parse it into the correct month. I need to transition from doing everything on a cash basis of accounting to accrual basis. And we can certainly talk about
Mhm.
what that means. And also, you need to start exploring having an outside third party. Obviously, we'd love it to be us, but someone that is going to hold you accountable and also provide a different perspective on, okay, what are my margins? How much money am I adding to the bank account? What does my inventory look like? Have I ordered enough? How am I planning for, fourth quarter if I'm a seasonal business? Or, what are my projections for the rest of the year? And how much cash do I need? And when do I need it? How am I going to get that cash? All those types of questions, again, should just align with the complexity and growth of your business. And it should all be scaling together.
Well, good. So it's one of those things that you can kind of scale into. You don't have to feel like, right away before you hit send on your first shipment into Amazon or post something on Shopify for the very first time. You don't have to have your bookkeeping and financial records and everything figured out. That's one of those things you can figure out as you go, if I'm understanding. So for those who maybe start getting to that, $250,000 plus mark, where having a real good handle on the finances is going to mean a lot more. So what are the things that you would be looking at if they had hired you as their CFO, for example?
Yeah, I mean, the first thing that I'm going to look at is, usually if someone is coming to us for the first time, the P&L and balance sheet is certainly a good place to start, but is
Hmm.
usually in disarray.
Okay.
So I usually prefer to look at the actual source documents of pulling their Amazon reports, pulling their Amazon sales, looking at the actual invoices that they're receiving from suppliers, looking at the freight expenses that they have and the actual advertising expenses, and lining all of those up and understanding, where are the pain points? Do we
Hmm.
have a gross margin problem? Do we have a fixed cost problem? Do we have a marketing spend problem? Like, where are the major issues that we can devote our time and effort to make the biggest impact? So yeah, and part of that process is obviously cleaning up the accounting side and making sure that we are implementing an accrual system and stuff is getting put in the right month, and also in the right place on your chart of accounts, making sure that a COGS item goes into the COGS bucket, and making sure that operating expense goes into the operating expense bucket, and that we're comparing apples to apples each month. And probably most importantly, seeing how those margin percentages, or the contribution margin percentage, and I know that that's a relatively strange term and one of my hot topics, but seeing how those percentages are moving in relation to each other each month. And that, I think, is another critical point that's being missed a lot. It's not just what is my margin today, what was it yesterday, and why did it change? Did my costs go up? Did my ads get less efficient? Did my rent go up, or did I spend more to get more reviews, or whatever the thing is? And having a solid accounting foundation for your business allows you to make those decisions so much faster and be very clear about what those decisions are. And it's just such a huge unlock for your business for a relatively small amount of money. I'm biased, but I really do believe that, and it's honestly one of the reasons that I started this business in the first place, is that I think finance is such a big piece that's missing from e-commerce. Everyone just assumes, hey, I'm gonna launch products on Amazon or Shopify or whatever, and I'm gonna spend a bunch of ads, and then I'm gonna be financially free.
And sitting on a beach with a laptop.
Exactly. And a lot of times, unfortunately, I see the opposite, where you start that
Hmm.
business and you don't understand the numbers, and you're losing money every month. And then the added stress, and then you're you're forced into these decisions that are based on, okay, well, how do I get that next revenue number, and not what's best for the business over the next 2 years, 3 years, 5 years.
Okay, great. So I think it all goes back to kind of what Peter Drucker once said, which is that what gets measured gets managed. So the more you're measuring these things, understand these concepts, the better decisions you're going to make as a business owner. So let's unpack some of those concepts for folks that maybe aren't quite aware. So you'd mentioned a couple times the difference between cash versus accrual. Can you help everyone understand the difference there?
Yeah, absolutely. So essentially, cash basis says that anytime something leaves my checking account, or when I actually write that check, that's when it's going to get put into the books. So, I mean, the best example is inventory, of course. And so when I write that check to my supplier, regardless if it's the 30% check or the 70% check upon shipment, then it gets recorded in my books for that specific month. So that's all well and good. It's much simpler. It's what your tax accountant usually is going to care about, especially if you're a smaller seller. But it doesn't tell you very much in the way of actual management reporting and decision making. What is more optimal is accrual basis, and essentially the foundational around the foundation of accrual basis is we want to account for expenses and revenues in the correct month for which it actually incurred, not when cash went out the door. So for example, I don't care if I purchased 10,000 units in the month of May. If I only sold 100, then I recognize 100 on my profit and loss. And that is the basic theory behind cash and accrual.
Got it. So it has more to do with when the transaction happened versus when the cash left the bank account. Is that a fair way of explaining it?
That is
there a nuance?
So much simpler than the way that I explained it. But yes, that's exactly right.
Gotcha. So leading into cost of goods sold, we all kind of probably understand, or folks who don't understand this could be a big surprise at tax time, that if, let's say, we're getting into Q4. So let's say you want to go ahead and restock before Chinese New Year, which is early February, I believe, this year. So maybe December 20th, you cut a check or you make a wire transfer to a supplier. Is this kind of the basis of, it's not really a transaction on an accrual basis until you make the sale, which might not be until May the following year? Is that kind of a way to look at it?
That is a phenomenal question. And we, of course, get this question more this time of year that, my accountant said I need to spend more money. And that may be true if your taxes are done on a cash basis. If they're done on a cash basis, certainly if you write that big check to your supplier, it is going to lower your taxable liability, no question. But on accrual basis, it is not. It doesn't matter if you buy, $10 million of inventory. It's only going to be recorded as an expense when those products are sold.
Yes. And so my suggestion to everybody, if these concepts seem a little strange or you're not 100% sure, don't take advice just because this is not intended as advice. So if you start getting into like, this doesn't make sense, or talk to your local accountant about your own situation, because we're talking more in general terms here. So sorry, you're going to say something?
Yeah. No, I mean, well, that brings up a really interesting point that I think is another misnomer in our space, is what is the difference and what are the incentives between all of these finance, accounting, and tax names and people? Your tax accountant does not care what happens month to month. They only care what happens within the year.
That's such a good way of looking at it. Yeah.
And because when you send them your P&L and balance sheet, you're sending them what that looks like annually. When I look at a P&L and balance sheet, sending it to me on an annual basis gives me absolutely zero idea what's going on in the business.
Mm.
So that, and your incentives from your tax accountant is to file your taxes accurately
Hmm.
and for you to pay as little tax as possible.
Hmm.
And that's great. But that is their intention. Your CFO's intention, or putting on your CFO hat, if you wear that hat in your organization, your CFO hat is, how do I create a sustainable business with sustainable profit, and that profit is growing every year, which may or may not align with lowering your tax liability. And
Mm.
then the other steps are, or the other people involved are, a bookkeeper or an accountant. And sometimes an accountant and a bookkeeper, those terms become synonymous, and they kind of are and kind of not.
Okay.
I would venture to say that all accountants are bookkeepers. Not all bookkeepers are accountants.
Okay.
Accountants generally are thinking a little bit higher level than bookkeepers. Bookkeepers are generally just making the entries, and
Hmm.
they're not necessarily looking over and managing to say like, oh, well, you spent $100,000 on inventory this month, but last month you only spent 50. What's the problem? Like, the bookkeeper is just at the transaction level, making sure that things get put in the right month. So I think all of these terms are really important to unpack and to think about what are the roles of each one of these individuals, and what are they trying to help you do?
Mm.
And knowing that, your tax accountant is not the best person to do your monthly bookkeeping, because their incentive is not for you to necessarily grow your business and make these decisions. Your tax accountant is there to lower your tax liability and to make sure that they're filed correctly. So, and I'll be the first to say too, as well, as a CFO, I don't care about the taxes. That's for the tax people to figure out. So my primary goal, again, is to make you more money and grow your business. And how that's discerned between which legal entity you use, and what state you file your entity in, and whether like you have some sort of offshore company or whatever. That's a whole different person. I mean, that's an attorney or a tax attorney. So understanding all of these different people in the finance and accounting ecosystem, what they do, what their incentives are, and who you should turn to for those specific questions, I think is another kind of misunderstood part of e-commerce.
Yeah. And that goes back to what you said earlier about, as you grow, you can get the complexity to grow. When you first start out, chances are you don't need a tax attorney.
Yes,
Having
exactly.
having gotten a birthday card and a Christmas card from a tax attorney, I can tell you he sent me the birthday card and Christmas card because an hour of his time is like a car payment. And so
Right.
that's one of those that maybe you can grow into if you have specific questions. And mine were more related to sales tax, but always understand you got to be talking to the right person about the right thing. And so to your point, maybe the bookkeeper might be that, first person, and maybe the tax attorney, and then maybe down the road, an accountant or a CFO, something along those lines. So you got other people helping you with this, because sometimes we get so wrapped up and I got to figure out everything. And so when you're not just looking at, business reports and Amazon, now you're starting to look in Xero or QuickBooks and trying to figure things out. You had mentioned earlier that there was, let's say, the profit and loss statement and the balance sheet. For those who don't understand, what is the difference, and do they connect to each other somehow?
Yeah, they certainly connect to each other, but fundamentally, uh, the P&L is meant for understanding, how much money did I add to the bottom line
Okay.
month to month. And there's a lot of other stuff too, but of course. But at the end of the day, how much money am I putting towards the bottom line?
Hmm.
And the balance sheet is more of a snapshot in time of all of my assets and all of my liabilities.
Mhm.
What am I owed and who do I owe? And
Hmm.
what what assets does the business have? For I mean, and obviously inventory is the usually the biggest one. If you're doing your own manufacturing, of course, you're going to have capital expenses. You're going to have equipment, or if you bought a building, that's obviously going to be on your balance sheet as well. So, but it's more of a snapshot in time of what is the current standing of the business in terms of assets and liabilities.
Okay. And so when you hear the old phrase of assets, correct me if I butcher this, assets minus liabilities equals owner's equity, right?
Assets equal liabilities plus owner's equity.
Oh, okay. Thank you. Thank you. I moved around the equation there. So all right. So assets equal liability plus owner's equity. So all right.
Correct.
So looking at it from that standpoint, um, the owner's equity, that is different than if I go to Quiet Light brokerage, or if I go to a aggregator and ask them how much is my business worth. That's a different concept, right?
Yes, in general. I mean, if is the question like how should I determine what my business is worth?
Right. That's not the balance sheet, or is it?
There are, I think it, of course, it all depends. Certainly elements of the balance sheet are very important, or can be very important, if you're in the process of selling your business or in the process of buying a business.
Mhm.
For example, the intellectual property will be found on the balance sheet. If the business has intellectual property or a
Mhm.
trademark or whatever, that would be very important to me as a buyer. I
Mhm.
would want to see that. If I'm purchasing the inventory of the business, and I'm not just purchasing, the Amazon listing or, the rights to the store or whatever, then I certainly want to know how much inventory is available and on hand, for the previous month. Accounts receivable, certainly, if I'm purchasing the accounts receivable, if you're selling a lot of wholesale, uh, then I definitely want to know how much is owed to the business, as well as again, if I'm buying the entire business, what is left owed? What are the outstanding debt obligations? Um, and are those going to be my responsibility as the purchaser, or are they continuing with the previous owner? And of course, it all depends. And so of course that can impact the valuation up and down, and that's part of the negotiation in
Mhm.
that process. And by no means am I a business broker, but I know enough to know that those are certainly considerations. I
Right.
mean, um, now typically when you go on to one of the brokerage sites and you see the like 35x multiple or whatever, I think you do have to ask yourself, okay, what is that actually being calculated on? Is
Mm.
that monthly net profit? Is it annual net profit? Is it a sales multiple? Is it an EBITDA multiple? Because that word gets thrown around a lot. Like, what are
Mhm.
we actually using that multiple on? And then again, evaluating whether or not you believe that and whether or not you think it's worth it and are willing to pay that price. I think that's a little bit more than you asked for, but
No, no,
happy to
that was
clarify any of
great.
that.
So basically, if I'm understanding it, there's clues into the health of the business on the balance sheet that you may want to look at if you're acquiring a business, or that a potential buyer might look at if you're selling your business. But really, the value of the business, which would be different than owner's equity, so to speak, would be like, for example, whether it's EBITDA or the seller's discretionary earnings. I hear is the term a lot. So whether it's 3x annual or 35x monthly, or whatever they're looking at, um, you're we're talking now more about the profit and loss sheet. So Let's walk through that profit and loss and some of the concepts that you brought up earlier. So what goes into cost of goods sold?
Of course. Yeah. What typically goes into cost of goods sold are just the product costs. So
Mhm.
whatever your supplier is quoting you, and freight. So, and this is specifically freight in. So the cost that it takes for you to get your product from wherever the supplier is in the world to your warehouse or an Amazon warehouse, or a other outsourced 3PL,
Mhm.
wherever the product's going to be distributed from. Typically, those are the primary elements of cost of goods sold. What are the like inventoriable elements
Right. Okay.
of the product?
Got it. So sometimes you hear on Shark Tank, they talk about like landed costs and stuff like that. That would basically be like your cost of goods sold. Am I saying that
Certainly,
right?
yeah.
Or
And if you're doing your own manufacturing, then it's going to be obviously a little bit more complicated. Your well, your raw materials will really be captured on the balance sheet, and then it will be transferred to the P&L as it's a finished good and actually sold. But if you're on a cash basis and you're purchasing labels, bottles, pouches, bags,
Mhm.
other raw ingredients or whatever, uh, and if you're incurring the labor costs to build that product to a finished good and your cash basis, that's all going on the P&L as well.
Okay. Good to know.
I mean, I'm
So
sorry, it's going into cost of goods. It's going to cost of
okay,
goods.
so that all would be in the cost of goods. We can imagine at the top you got your sales, where it's coming in from different channels. Then you got your cost of goods, and then what's not, at least in zero, I know it's not a default, and that's the contribution margin. So, but you can customize a lot of these reports in the bookkeeping softwares out there. So, what would next be as we kind of flow down that profit and loss sheet and get to contribution margin? What is it, and why is it important to measure?
Yeah, of course. Yeah, so we have gross sales, we've got returns and discounts, which we kind of skipped over. And then we've got,
Hmm.
that gets you so to take a step back for a second, I like to see gross sales, discounts, and returns all split apart, because
Okay.
those are two very important
Hmm.
elements that you need to know, again, how they're changing in relation to each other from month to month. So
Okay.
gross sales at the top, discounts, returns, then your cost of goods sold, that gets you to gross profit margin. And then you've got all of your variable expenses. So everything that's still going to be attributed to sales that are going to change based on volume. So the classic ones are your fulfillment costs, all your Amazon fees, your merchant processing fees, your Stripes and your PayPals and your Braintrees. Let's see, we had fulfillment, we had merchant processing, shipping obviously is a huge one,
Hmm.
and ad spend.
Mm.
Ad spend's a huge one. Now, uh, I do think it's important to understand an ad spend specifically if you are going to separate out the cost of the actual ads from the agency retainer or whatever you're paying the agency to manage the business, if that's a fixed amount or if
Okay.
that's a variable amount, and whether or not you include that in contribution margin. I know this is getting like really granular, but I think as a decision point, the
Hmm.
important point is to know what you are including as a business owner, what is important to you, creating that methodology for yourself and what works for your specific business decision or your specific business, and then acting on it.
Okay, got it. So at some point you want to have some level of consistency. So if you're looking month to month, it's not, you're looking at apples and oranges. You've got apples kind of across the board, right?
Yeah, absolutely. And so those are the major components of contribution margin that get you to that number that you want to see every month.
Okay.
And I think it's also important to also take a step back and understand why we separate gross profit and gross margin from contribution margin. And for me, the way I like to think about it is, if everything is lumped into one bucket, if we just have margin, let's just say margin, it includes everything. It's it's more difficult to understand where the problem is. But if I have them split between the two, and I see that my gross margin percentage is changing drastically, then I know immediately that I have a product problem or a freight problem. But if my, all of my other variable costs, if that percentage is changing drastically over time, but my gross margin is staying relatively constant, then I know, okay, this is where I need to look. This is where I need to allocate my time. Maybe it's an ad problem, or you got charged the holiday rate for more storage and more shipping and fulfillment. Maybe you had a huge order from Alaska, or you had 2,000 orders from Alaska, and you incurred it's in like shipping zone 8 or something like that.
Right. So it's gonna be a little more expensive there. Yeah.
Yeah.
Okay.
So that's where I know to go do more digging.
Got it. So this kind of helps us do more digging, because a lot of it is kind of the stuff that's the more, for lack of a better phrase, core costs in a business. And then we get down to the rest for the profit and loss. And you're probably thinking like, miscellaneous costs, office supplies, the stuff that could be more variable and doesn't necessarily have to do with the day-to-day operation. Is that a fair way to phrase it?
Was below contribution margin?
Yeah. So after we get from contribution margin to 100%. Profit. Okay.
I think about everything under contribution margin as, for the most part, if sales were to go to 0 tomorrow, what cost would you still have to incur? So if you hired a general manager
or a virtual assistant,
virtual assistant, I'm likely still paying them, unless the business is bankrupt. Then like that's a different set of decisions. Right. But if my sales went to 0 for 3 days, yeah, exactly. Then I'd still have to pay rent for my office, or rent for my manufacturing facility, or whatever. And you can of course get cute and assign some of these more fixed costs to product, like fine. But again, that's much further down the path and complexity.
Gotcha.
And that's really hardcore managerial accounting, and it's not easy.
Okay.
And not worth doing until you reach those.
Right.
Levels.
So yeah, and to your point earlier, like, people listening to this that, maybe they're, probably going to clear 80,000 or 150,000 this year. They don't need to start worrying about some of those, nuances. These are things you can kind of grow into. So, let's now talk about what is probably a pain point for a lot of people listening to this, if they're listening to this around the time it comes out. So we're recording this, it's October 13th. This will come out a couple weeks after that. The big topic this time of year for a lot of folks is cash flow. So your profit and loss might be showing, hey, I'm making money, but your bank might be getting smaller and smaller and smaller and smaller. So can you kind of help everybody understand? Because sometimes you don't truly understand why cash flow is so much different than profit and loss until you're in the middle of it. So what are some clues you have for managing the cash flow side of thing and getting in front of it, so maybe next year it's less of an issue?
Yeah. So, the beautiful thing about doing the books right and having someone actually completing them month to month on accrual basis is, I'll use QuickBooks because we're a QuickBooks shop, but if the P&L and balance sheet are done correctly, then you just go click on the report that says statement of cash flows, and you got it. And you know exactly how much your bank account increased or decreased by, and what caused it. Was it a change in accounts receivable? Was it a change in accounts payable? Was it, a change in financing? Whatever the thing was. So that is certainly the easiest answer. But the common questions we get around cash, of course, are like probably the primary one is, how much do I need and when do I need it? And how am I going to fulfill these orders? And, with all of the slowdowns of being able to get product in the US, the common solution has been, well, we'll just order more, because we now have to hold on to this inventory for much longer. And I get that most people are probably going to make a gut decision and just say, oh, well, I'll just order 25% more. I'll order, what I think is 3 months more. But I think doing the hard work of, okay, how much is that actually going to cost me? Can I afford it? And how does that impact all of my other, strategic priorities that I wanted to accomplish? Is that going to impact my ability to increase my marketing budget? Is that going to impact my ability to launch the new products that I wanted to launch, or launch into a new channel? Or probably what's worse is it going to impact any sort of cash cushion that I've built up for a rainy day? And we get that question a lot of, okay, well, how much should I keep in my bank account? How much do I need on hand? And I think there's no right answer. I generally say like 3 to 6 months of fixed costs. So again, if sales were to go to zero, which if you're an Amazon seller is a more and more real possibility every day, from your account just getting shut down. Or, we had a client situation where they're more of a drop shipping model, but one of their key products, the supplier was packing them very poorly and shipping them with a different carrier, and the product was being returned a lot at a much higher rate. And of course, Amazon shut down, or they lost the buy box, and so it impacted them drastically. And luckily, he has a really strong balance sheet, so it wasn't like a major, the house is on fire moment.
Right.
But it's a very real possibility that your account can get shut down for whatever reason. And again, you have to be prepared for that, and be able to absorb that into your business, because that is more and more of a reality.
Yes, very true. Very true. You have to be in front of things. So you got to give yourself a little bit of a cushion. And to your point, like if you start increasing your orders or how much you're going to keep on hand, which I understand why people do it. I've done it this year, ordering sooner for the holidays, for example, but the backflow of that is on the other end, you're going to run out of cash or get closer. Or maybe just said another way, your cushion becomes smaller because it has to go one way or the other. It's at a certain point, a math equation.
Yeah, absolutely. And the math equation is, if I do stock out, what is that going to cost me? Because there's certainly the lost sales side, but then there's also the cost of holding additional inventory and, all of the things that we just talked about. And you've got to decide, what's worth it to you.
Right.
And I think the other part of this is that, like, we're all human, and it's actually more than the math. And it's, what is your kind of basic business philosophy as an individual? Are you more risk averse? Or do you want to introduce more risk? Is it going to impact your sleep at night if you don't have 3 months of cash in the bank? And is it going to impact your sleep if you have less than 6 months of cash in the bank, or a year of cash in the bank? Like, there is no hard and fast rule. We're all looking for black and white rules. And
Yes.
there's very, very few out there. And we have to understand, take the best advice from everyone else and then make it our own, and understand how that impacts us specifically. And I know that's said so many times, but I see it so much in our business in finance. And when you start talking about money, everyone starts to freak out a little bit, and it becomes very serious and very real very fast. And this is generally the advice that I give to our clients.
That's such good advice. Really, anything in business. I just we were talking earlier. I just finished up a 1-day PPC related summit, and I've had some people question like, "Hey, what is the magic thing I should be doing?" I'm like, "Well, I don't know. It depends on
Yeah.
your business. We'd have to dig into your business to find out, because it's not that black and white. We want the black and white answers. Just check this box and do this. But if you do these things, if someone out there says, do all these things and you'll be successful, chances are other people are doing it and you're going to probably get the same lackluster results they are. So you got to do something and zig and zag and make it your own. So one other topic I wanted to talk on is, before we hit record, you talked a little bit about invoice payment and how this is kind of a pain of like, oh God, I got to pay this supplier, or I got to pay this person, or, pay that. And it's like, I guilty of it. And I'm sure the person who's going to be editing this will be like, Kevin, yeah, sometimes you forget to pay on time. I'm like, I'm sorry, I don't mean to. So for the editor who's listening, it's never intentional. So it is a pain point sometimes when you're paying invoices or paying suppliers or paying assistants or paying employees. So what are, with the, let's say, accounts payable, what is the what's the best way to manage all that?
Yeah, no, I'm really glad you brought this up, Kevin. For bill payment and accounts payable is really strange, because we as business owners have become so used to outsourcing everything else. We outsource manufacturing, we outsource all of our fulfillment, we outsource all of our shipping, we outsource a lot of our marketing and advertising. But for whatever reason, paying bills is like this leftover thing that we feel like we have to do ourselves, when in reality, it adds absolutely zero strategic value to you as a business owner every month. And I know that you can argue, oh, okay, well, if I'm actually writing the check, then I'm going to be more aware of what's going on. That's not true. Like, you're going to be more aware of what's going on in the business if you have a strong accounting function and you're actually reviewing the overall picture. No single check is going to do that. So I see a lot of our clients and a lot of business owners spending hours paying bills every month, trying to go through their email inboxes. Okay, where was the actual invoice? Did they even send an invoice? Who do I need to pay? How much do I owe? When do I owe them? And all these different questions. And it just takes valuable time and energy when they could be allocating that to, hey, what products am I going to launch? And anything else other than paying bills.
Right.
So I've seen it as a huge pain point. And the process in general you should have a separate bill pay system. There's plenty of them out there. Our favorite is bill.com. I think that there's, obviously there's PayPal, there's TransferWise, there's Remitly, there's Payoneer, all these different platforms. But the more platforms you have, the more complexity you're introducing to your business. And as the payor, the payee, all of your contractors and people that you pay in general should be conforming to what your payment system is within reason. So I think trying to consolidate all of the bills into a single platform makes a lot of sense. I think the other most important thing is identifying how you're going to communicate with these suppliers and vendors and contractors and attorneys when it comes to billing and invoicing. And using your name at yourcompany.com is not the best way to do this, because we have to set ourselves up for scale. So creating an invoices at yourcompanyname.com or an accounting at your company's URL, or a payables or a payments or something similar to that, or even a support, I don't think is best way. I think you should be using that email account for actual like customer
Right,
support.
right. Like, hey, my order didn't arrive. Yeah.
Yeah, but creating a separate inbox and communicating to those vendors that, hey, our policy is we're only going to pay a bill if we receive an invoice for it. It needs to be in a PDF and it needs to be sent to this inbox, and it needs to be sent to this inbox before a specific date. And if it doesn't, that's fine, but it's not going to get paid until the next payment cycle. And if you're clear on those expectations with your suppliers and vendors, and then you actually hold up your end of the bargain with the 2 dates or the 1 date a month that you're going to pay bills, then everybody's happy, and there's no, all the expectations are clear, and that there's no, miscommunication. But the number one, the further you deviate away from that process and just do it ad hoc, or, oh, like, I was lazy this month, I didn't do it, or, whatever, then you're eroding the relationships that you have with these people that are, trying to help you be successful. And, everyone starts to freak out when money doesn't go out the door on time. And, those vendors are always going to peg you as, oh, this is my problem person. If that continues down the road, and your reputation is certainly going to suffer. And I think the other issue is, I see a lot of clients say like, oh, well, we only have like 5 or 10 bills. Okay. But what happens as your business scales and you go to 20 invoices, and then you go to 50 invoices? Now what? Are you still going to continue to pay those? Or are you going to create this system ahead of time and, have an admin manage it, or have, someone like us manage it? So
Gotcha.
Bill pay is the least sexy part of business, but it is my
No.
favorite topic right now.
Well, I mean, it is important. And to your point, like, we've all done it where, we realize, oh, wait, I haven't paid so-and-so for that invoice or whatever. And, maybe you feel bad, or you get the reminder email, and I'll get to that right away. And then all of a sudden you get a stronger reminder email or something like that. And you're like, I didn't mean to. Because, to your point, like, people have a lot of things going on. So I know for a lot of business owners that would be like, okay, money's going out of my account and someone else is managing it. Sounds scary. So how do you make sure that it's legit stuff going out and someone's not embezzling or whatever fear people have?
Yeah, no, that's a great question. So again, it's very platform dependent. Something like PayPal, it is more Wild West. I'm not aware of a lot of checks and balances and user roles within PayPal, but with something like Bill.com, you set all of those. The accounting phrase is segregation of duties up front. So, for example, for the payables that we do manage, we have the ability to prepare the payment and execute the payment. But the middle step, which is the most important, is the approver step. So the founder of the business, or whoever they designate, always has to approve the bill before payment is able to be executed. And I mean, I sound like a Bill.com fanboy, but I have seen all the other platforms, and like, of course, they all have their own challenges, but I think Bill.com has the least of those challenges. And sometimes certainly, like, you need a secondary payment method, but for the most part, Bill.com is the best solution that at least we've found. But yes, and you can see the due date, you can see the amount, and you have the ability to approve or deny it. And then, whoever you have managing it is able to actually execute that payment.
Well, this has been quite the conversation. We went pretty deep on some topics.
Yeah,
This
this
is
is
good.
this is
This
way
is
deeper than we've been in the past, Kevin. This is
Yes,
pretty cool.
this is good. This is good. So for folks that are, made it all the way through this, you probably just thought like, wow, I feel like I just got kind of like a crash course in, graduate level finance, or how to actually put that into practice in your business. So, for folks that are maybe excited about like, okay, how do I learn more about this kind of stuff? Or if I want to follow Sam or learn more about Sam services, where would they go?
Yeah, absolutely. Our website is ecomcfo.co
Mhm.
or ecomcfo.co/bill pay for bill
Okay.
payment.
All right. So they can go to ecomcfo.co or ecomcfo.billpay, one word.
Absolutely. You can also skip the website and just email me directly at sam@ecomcfo.co. It's pretty easy to remember. And happy to have a chat or help the community in any way that I can.
Awesome. Well, this was very helpful. So appreciate it, Sam.
Awesome. Yeah, Kevin, always a pleasure. Thank you
Same
so
here.
much.
Awesome. Thanks.
All right.